Today I'm going to give you a simple and easy process on how to buy a home. No messing around, no drama. Buying a home can actually be pretty easy as long as you know what to expect. But what if I not only showed you how to buy a home, but how to buy a home with less money? That's right, you might not need as much money as you think. Stick around and I'll give you my simple process on how to buy a home. My name is Rob Bailey, a realtor in the Chicagoland area, and if you have any questions about buying or selling real estate, feel free to let me know. The first step you should take if you want to buy a home is to get pre-approved for a mortgage. While I know people often want to start looking at homes first, I always suggest that you start by getting pre-approved. The reason I say you should do so is because you don't really know what your budget is until you're pre-approved by a lender. For example, how much home can you actually buy? $300,000? $400,000? The last thing you want to do is to start looking at homes at $500,000 just to get pre-approved and find out you only qualify for $400,000. That kind of ruins the home buying experience, doesn't it? Getting pre-approved nowadays is easier than ever. As far as places you can go, you can either use online lenders such as Guaranteed Rate, you can use the place you bank at such as Chase or Bank of America, or if you're part of a credit union, they often offer the lowest rates and the best deals. And if you're still stumped about ideas on where to find a mortgage lender, always reach out to somebody who's bought a home in the past or reach out to a realtor you know and trust and ask them for a referral. They should know plenty of people that they've worked with in the past that are pretty good with loans. And by the way, if you're looking for a lender in the Chicagoland area, feel free to reach out to me and I'd be happy to refer you some mortgage lenders. When you start the mortgage application to get pre-approved, your lender is often going to ask you for some paperwork. It's usually going to be 2 months worth of pay stubs, it's going to be your W-2s, and 2 years of tax returns. So just make sure you have that paperwork ready. They basically need this to verify your income, and with that paperwork, they can let you know how much money you can afford. As far as your credit score is required, the minimum amounts you need depends on what type of loan you're going to have. If you're using an FHA loan, for instance, the minimum credit score required is a 580, but if you're using a conventional loan, the minimum requirement is normally between 620 and 640. But for the real question, what's the difference between an FHA loan and a conventional loan, and which one should you use? The FHA loan is a loan that's popular with first-time home buyers because it's easier to qualify for, and it only requires a low down payment of 3.5% of the purchase price. Like I said before, the credit score requirement for an FHA loan is lower than what's required for a conventional loan. So once again, that's why many first-time home buyers opt for the FHA loan. The downside to an FHA loan, however, is that if you use an FHA loan, the home has to pass an FHA inspection. An FHA inspection basically says that the home has to be what they call move-in ready. So if the home has any issues such as peeling paint, broken windows, or maybe the heat or the electrical doesn't work right for whatever reason, it's not going to pass an FHA inspection and you can't use the loan to buy the home. The bank is going to decline the loan. If you use a conventional loan, however, you don't have to worry about that inspection. So often sellers like to see conventional loans more than they like to see an FHA loan. Also, I have to mention as far as credit scores go, while you can qualify with a minimum credit score of 580 for an FHA, for instance, so even though you may qualify for a loan, your interest rate is going to be through the roof. So that's why I recommend if you're looking to buy a home, you have a credit score of at least 660 and above. That's how you can qualify for the best rates and save some money on your mortgage. Now, while we're talking about pre-approvals and mortgages, how much money should you save in order to buy a home? To keep it simple, I always recommend that you save 6.5% of the purchase price of whatever the home is that you're looking to buy. So for instance, if you're looking to buy a home that costs $300,000, you should save 6.5% of that, which comes out to $19,500. Now, what goes into that number? If you're buying a $300,000 home using an FHA loan, 3.5% of that is needed for the down payment, and you're going to need another 3% for the closing costs. So the 3 plus the 3.5% equals the 6.5% you need of the purchase price in order to buy. If that sounds like a lot, don't worry, there are a few ways that you can get some help with that down payment. One way is to speak with your lender about down payment assistance programs. There are a lot of down payment assistance programs out there to help homebuyers, especially first-time homebuyers. So always make sure to check with your lender to see what programs they offer. For example, a popular program in Illinois is called the IDA program, where they can offer down payment assistance of up to $10,000. So that'll knock a huge chunk off the money that you need to bring to closing. I'll make sure to provide a link to the IDA program's website, but also, once again, make sure to check with your lender because there are a lot of programs, so they might have something else that they can help you with as well. Once you have your pre-approval letter from your lender and you know how much you can afford, the next step you should take is to find a realtor. Now, of course, if you're looking for a realtor in the Chicagoland area, you already know who to call. But otherwise, I would suggest to once again either ask for referrals from people you know who have bought homes in the past, or try to look to see what realtors are working in your area. And once again, interview them, see what they can do for you, and see if they're a fit. When you're interviewing realtors, make sure you get an idea of how they work. For example, with my buyers, I know that my buyers often like to go on websites such as Zillow, realtor.com, or any one of those and just kind of look at homes that they're interested in. I will tell my buyers that if they run across any homes that they're interested in, feel free to send me the info and I can look into it for them. And if I feel that it's something that matches their needs, and if everything with that home checks out, I can set up a showing for them, normally within 24 hours. Just depending on the seller's availability. On top of that, I also like to look for homes for my buyers based on the criteria that they give me, and I'll send them homes to look at as well, and they can let me know if they like them or not. I like to use this two-pronged approach because I feel that it helps to speed up the process, because I know that you as a buyer, you're probably looking at 10 o'clock or 11 o'clock at night, and to be honest, I just can't match that. So if you once again run into any properties that you're interested in, I just let them know, text me the address, and I'll look into them as soon as possible. Once again, every realtor works differently, so let me know in the comments what you look for in a realtor when buying a home. Alright, so you got your pre-approval letter and you got your realtor. Your next step would be to start looking at homes. This is the fun part. Like I mentioned before, you can either look on websites such as Zillow and realtor.com, and you can also have your realtor send you properties that are for sale that match your criteria. Once you find something, it's time to set up the showings. Now, how exactly is the real estate market doing? What's going on with the real estate market? In the Chicago area, it's still pretty much a seller's market. There is low inventory. I believe the month supply of inventory is around 2.5 months. That means if no other properties came for sale, all the inventory would sell out in 2.5 months. In a more balanced market, that number is normally around 4 months. So it basically means there are more buyers out there looking to buy than there are homes to sell. So what does this mean for your average buyer? This means that when a good home comes on the market, you're gonna have to fight for it. Here is how I generally coach my buyers. If there is a new home on the market, the home looks good, and the home is priced right, chances are that home is going to see multiple offers over the weekend. So you're going to have one shot to basically go at this home, so make sure you offer your highest and best. Offering your highest and best means to think about the most money that you would be willing to pay for that home and offer that, because you're most likely only going to get one shot. This can also mean paying over the asking price of the home, which happens often, especially in a market like this when there are multiple offers. I know that throws a lot of buyers off, but if you are serious about buying a home in this market, you have to be prepared to do that. Once again, you might need to fight to get that home that you want. This isn't the case for all homes, however. If you're looking for a deal, then take a look at homes that have been for sale for over 30 days. Now, because a home has been for sale for over 30 days doesn't necessarily mean that there's something wrong with the home. It could just mean that the seller and the realtor just overpriced the home. You'd be surprised. All you have to do is overprice the home by a little bit, and it can be the difference between no offers in 30 days and multiple offers within 5 days. If you do run into a home that's been for sale for 30 days and over, that seller may be more willing to negotiate because there are no other buyers to compete against. That means you can then kind of lowball them and make an offer under asking price, and once again, the seller might be more willing to budge. So that's why I always tell my buyers not to be afraid to look at homes that have been on the market for a while, because it might be a diamond in the rough. There might not be anything wrong with the home. That's a way to really get a deal in a market where there is a lot of competition and low inventory. While we're speaking on offers, it's important to talk about another aspect of an offer that can help you save a lot of money at closing, and that's to ask the seller to pay closing costs. Here's a quick breakdown on how closing costs work. Let's say you have a home that's for sale for $300,000 and you want to offer the asking price. However, you also want to ask the seller to pay closing costs of $10,000. So you're going to submit an offer to the seller, and the seller's going to see that you're offering $300,000, but you're asking them to give you a $10,000 closing cost credit. To the seller, that basically means you're offering them $290,000. This means that, to be honest, the seller really doesn't mind paying your closing costs as long as they get the money they're looking to net. So if the seller was looking to net $300,000, you may want to offer $310,000 and then ask for them to pay $10,000 in closing credits. So just keep that in mind whenever you're making an offer. Don't just make an offer of $300,000 and just ask them to give you a closing cost credit like it doesn't affect them. It all depends on how much the seller is going to net. Asking the seller for a closing cost credit is a great way to lessen the money that you need to bring to closing. So for instance, say you offer $300,000 and you need $19,500 to close. If you ask the seller to pay $10,000, you only need to bring $9,500 to closing. Most lenders will allow a seller to contribute up to 6% of the purchase price and closing costs, so just keep that in mind. And also, I have to mention this here. If you're in a multiple offer situation and you're asking the seller to pay closing costs, it isn't as attractive to sellers as a buyer who is making an offer without asking for closing costs. That buyer who's not asking for closing costs looks more stable financially to the seller, so they're most likely to go with that deal because they feel that deal is less likely to fall apart. So if you're in a multiple offer situation, it's not always the greatest idea to ask the seller to pay closing costs, but if there are no other offers, by all means try it, because that's how you get a deal and that's how you can save money. Alright, so once you've found that home that you like and you've made that offer and your offer is accepted, congratulations! Now you're on to the next step. After your offer is accepted, there are a few things you need to do. First, you need to turn in your earnest money. Your earnest money is a dollar amount that's agreed to in the contract, normally a few $1,000s, that is put in a separate escrow account in due faith just to show the buyers that you are serious about buying a home. Once this money is put in the account, you usually have about 5 business days for what's called an attorney review period and an inspection period to make sure to check the contract as well as the home. If you find anything that's wrong within this period, you can then cancel the deal and get your earnest money back. While you turn in your earnest money, I also recommend that you hire an attorney, a real estate attorney. Now, while it's not required, it's highly recommended, especially in the state of Illinois, where we often use attorneys. Or at least in the Chicagoland area, I should say. During this time, you should also obviously hire a real estate inspector to go over every inch of that home just to see what's going on with the property. Now, once you do your inspection, then what's going to happen is what I like to call negotiation 2.0. If the first negotiation was you submitting the offer, negotiation 2.0 is going to be you renegotiating after you see your inspection report. Most likely there's going to be something on the inspection report, so I recommend you go over it with your attorney and your realtor to check to see if there's anything major on there that concerns you. If you find something you don't like, you can go back to the seller and either ask them to make those repairs or to ask them for a repair credit, which you can then take that money and use it to make the repairs yourself. From there, you can see how the seller responds, and then you can decide if you want to move forward with that deal or not. If you do decide to move forward with the deal, then the next step would be to do the appraisal. That's when the lender sends someone out there to determine the value of the home to make sure that the home is worth the amount that they are lending. Once the appraisal comes back, you're almost done. After the appraisal comes back, we're waiting for the lender to send us a clear to close. Once we get that clear to close from the lender, we then schedule the closing and we'll schedule a final walkthrough either the day before or the day of the closing. The final walkthrough is when you as the buyer just walk through the home just to make sure everything is as it was the last time you saw it, because once you go to the closing table and you sign all the documents, that home is yours. So you want to make sure that everything you agreed upon in the contract is there, such as the appliances. You do not want to skip the final walkthrough and go to closing and sign the paperwork just to go to the home after the closing and find out that a tree fell on the home. Once you do the final walkthrough, you go to closing, you sign all the paperwork, and congratulations, you have bought a home. If you want to see examples of homes for sale in the Chicagoland area, feel free to check out my channel. Otherwise, if you have any questions about real estate, feel free to reach out to me.